Today I'm going to take you through an S&P breakout trade by one of the AXIA Elite Traders. So let's get into it. The chart that you can see here is the 1 minute chart of the S&P. So this is on the 7th of May. And the part here in the white box we were looking at, so we're looking at the market pushing out of this auction block here and setting new highs. This yellow line here is sort of a vulnerable daily high from a couple of days prior. So let's look at that in a little bit more detail. So here on the left is our daily S&P chart, and this is the big sort of coronavirus sell-off we've had, and then now we're in this sort of like pullback of this bear market. Sort of more recently, if you look where my mouse is, there are this sort of rally up here was into at the FOMC meeting and then the ECB meeting, where we started getting a bit of liquidation. The market then sort of put in a low here, and this low sort of corresponds with the VPOC of this range in here, so it's kind of like a rejection of that. So in a way, you know, it's telling you that the market's at least in sort of the immediate term is potentially, you know, bullish. But obviously, you know, in the bigger setup, the market's bearish. So you know, just thinking in the right time frames. Now on the right, this chart here is our profiles. So the way I have my profiles in sessions. So here, this one here is the like S&P cash session, and this is just like the futures only when the stock's closed. And so we can see here, this is that yellow line that we had on the other one. This is that vulnerable daily high. And you can see here there's just no excess on this day, so this is from the 5th. Then sort of during the like Asian European session, the markets came off more again in the next US cash session, traded back up, and then the US session on the 7th opened up here just below this these vulnerable highs, or this vulnerable high. So the trade we want to look at now is, you know, can we find a way to get long to play for the break of this? And yeah, that's where we're going. So just sort of summing up what we've talked about so far in the setups, the markets, you know, rallied into FOMC and ECB. There was a liquidation post ECB. Market set a low with some excess, and then and sort of during its trading had left a vulnerable no excess high from Tuesday the 5th of May. And so the idea that we're looking at now is we're looking to play for a break of this no excess high at 89 3/4. Okay, so back into the 1 minute chart. So the part that we're going to watch is just from in here. So we're going to start watching the ladders of one of our elite traders in this zone here. So this is at the top of this auction range, and then what we're going to see is that the market's going to come down, but it's going to get picked up again above these lows, and then we see it driven to new highs. Now where we get in, the trade is already long, and we're just going to look at a bit of the trade management and then look at the actual move. Okay, let's get into it. So these are the ladders, and this one here, so third from the left, is the S&P ladder, and so as you can see, we're 100 lots long. Alright, let's get this going. So yeah, so as I said, so we're already long, and already long, looking to play for this break. Alright, so we've got a bit of selling coming in here. Right, pushing back below our level, our entry price. Alright, can the market catch a bit of a bid? Um, 85s are sort of the highs of this range, this auction block that we're trading in. So as we saw before, when the clip started, we saw you know, selling at the highs. So here we go, now we're bidding back up again. Can the market take out these highs at 85? So alright, someone just hit the market there. Alright, and we're not really getting a strong bid, but it is coming back. Alright, here we go, so we're bidding into 75s. But someone seems quite happy to sell 75s. Alright, now, yeah, selling, sorry, what I'm saying is selling 84s. Alright, and so again we have another rejection there of the highs of this auction block. So the market can't really get above 85s every time we're sort of at the high 84s, there's a seller stepping in. And so again, so we've seen this sort of seller here about 3 times. And again, the market's not getting a strong bid through it. But it is still, you know, remaining at this high. Someone's still obviously buying in here, because we haven't had a release yet. Alright, so now we're looking to see if there's any weakness in the seller. There's quite a bit of selling now, so back below our price. Right, so ideally we'd like to see this market get picked up again if it's strong. But what we see is we can't really get above these 83s. And so you can't see the candlesticks, but yeah, the market can't get above 83.5, which is what we're seeing right now. And so now we're starting to sort of ask yourself, like, okay, we've had somebody reloading, a seller reloading at 84s. We really, you know, want to see the market getting back up again and sustaining out there. Otherwise, maybe it's not quite ready to go yet. And so then you've got to think, okay, whereabouts maybe we want to, you know, we're going to draw our line in the sand. And so again, like I said before, these 83.5s, the market just can't bid back above there. So what was acting as sort of a small support is now acting as resistance. So we really want to see the market push back above there. Right, and now it's, so we're getting selling into to 82s, 82 3/4, so 82.5. The buyer just tried to pick some up, but the market, you know, there is a strong offer here. Right, now we're breaking down through the 82s, 81.75s. Okay, and so right there took it off. So okay, we're you know, there was some support there at 82, someone was buying. Once that was broken, immediately out of the trade. The idea is not working right now. Maybe the market's not yet mature enough. or this range is not yet sort of developed enough for this break. But still remembering that this is quite an important level. You know, this is a really, really blunt high on a daily, and so just because the market didn't go then doesn't mean it's not over yet. Okay, so here we are down at 80s, and the market now is bidding back up again. It's bidding back up quite freely. Now the other thing to remember is that low at 80s is above the low of that range. So the low of the range is 79s in that auction block that we were looking at in the 1 minute chart, and so a buyer stepped in above that and has bid the market back up to around where we were. So we got out at 81 3/4, and so 83.5 is where the market couldn't get above before. Okay, so it's now holding above 82s, and now we're looking to see, okay, can the 82s hold? If not, then this trade's potentially not on. If we can get above 83.5, you know, then the upside's looking good. And so he's entered long there with another 100, buying back his original position. Alright, so someone's still selling sort of from this 83.5, 83.75. But here we go, the market's now bidding up there and it's paying into 84s. So this is looking quite promising for the break. The market really needs to just cleanly get above there. And here we go again, bidding. A seller coming in. Then hitting a market. Right, can't get below 83. Right, again, looking to see if the market can bid through. And ideally want to see it hold above 82s. Which is where that support was earlier, and while we're doing that, we're still strongly convicted on move to the upside. So we've had that nice, well, that flush to the downside that's taken out any stale longs, and the market bid quite back nicely up through there, holding above 82s again. And here we go, now bidding through 84s. Can it get above and sustain? $84.25. Yeah, it's taking that bid. Now 84.5. 84 3/4 bidding into 85s. Right, and it can't rotate back far. There's some good pressure from the buyers. Alright, and there you go, through 85s. Okay, so now we've broken out of this this auction block, which had a high at 85s, and now we want to see the market go out, and we want to see it take that level, which is 89s3/4. Alright, there's some good aggression from the buyers. Can it get through 70s? Yes, there we go, it breaks through. So 88 is a new high. Alright, bid up straight through there and market. So 85.5. Taking some profit there. Oh, sorry, adding. So then through 89s, 89.5. So 89.75, yeah, there we go, bid straight through that level. okay, now can the market sustain? It's now broken that vulnerable high from Tuesday, right? Traders now taken 50 off, now another 30 off. This market's it's sort of lost its momentum. There's a seller in here. Can it get above sort of 91s? Bidding into 91. It's taking 91 bid, 91 and a quarter bid. And just push the highs. Alright, now the trader's taking some more profit. Positions now 40 long, now 30 long, now 10 long. And just looking to get on this final push higher, last 10 lots. We're still long. Alright, and then you go out with the rest of the position. So while the market's still showing some aggression, although it did show you before that yeah, perfect. So this trade, if we just head back to the charts, was all about building your conviction through here. So the market got into this auction block here, where potentially we could break through the day's highs and then follow on and take out Tuesday's poor high. And yeah, the key was just sort of like looking here, okay, can we get above this level? And no. And then when the market got trapped down here between sort of 83.5s and 82s, thinking, okay, well, we want to see these 82s hold if this market's still strong. It didn't, it flushed out, but the market came back up. And then we saw the trader immediately looking to get long again. So, okay, as long as we're holding above 82s and there's an aggression and there was that nice kind of like picking up of this trade through here. So when it came down, it got picked up nicely. Yeah, and then again started auctioning in here, held that 82s. You can see it held comfortably above there. And then we pushed up and auctioned through the highs. And then the market definitely found some more kind of two-way trade up here, and then used kind of one final leg up to flick out of the rest of the long position and take profit. And so that's how the trade was executed. And yeah, and so that's actually quite a clean break. But yeah, I think one of the key things about this in terms of the trade management is that, okay, the market might not have gone the first time, but recognizing that this, that it was time to get out because the buyers weren't holding. But then the way that the market got picked back up and brought back in, it meant that the original idea is still back on, and then using that aggression to have another go is really important. So I suppose the key takeaways from this are quite simple. It's just that prior days can leave behind some good vulnerabilities that you can then use for your trade ideas. In this case, it was the fact that there was this no excess high that had been sitting around waiting to be taken out. And then the other key takeaway here is just about backing yourself and thinking, okay, is my idea still valid? And if so, willing to have another go and another go at it, and to show that aggression to be in there, of course. So yeah, this is quite a straightforward trade idea, but yeah.